It's March the 5th, and this is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwagu. For the first time in more than a decade, Nigeria's fiscal budget 2020 was signed into law in record time. However, a series of events seem to be threatening the feasibility of its implementation. The outbreak of COVID-19, which currently pressures global economic stability, is calling for major monetary policy actions from systemic central banks, as well as critical fiscal stimulus from global systemic fiscal authorities. Just this week, S&P Rating Services downgraded Nigeria's outlook from stable to negative, coming after Fitch's initial downgrade and IMF's revision of growth forecast. More disturbing, global oil prices continue to show signs of vulnerability, while the country's dwindling external reserves continue unabated. Amidst all of these, the critical question to ask is the 2020 budget assumption still realistic or wishful? Although the federal government has announced plans to review the 2020 budget, but what will that entail? Let's listen to the finance minister talk about this.
We are concerned because it does have an impact on revenue, and at the current crude oil price of 53% is below the budget benchmarks. So what we're doing is we're studying the situation, and when the budget was passed, we committed to doing a mid-term review. So when we do the mid-term review, if the revenues are so significantly affected, we'll have to do some revisions in the budget by way of budget adjustment. But I also want to inform this meeting that the crude oil production is now at 2 million barrels per day, and in some days it has even moved up to 2.1 million barrels per day. So that in itself will be a cushion, but all the same, we are not taking any measures now until we have a reasonable period within which we make a review, and then we may need to do an adjustment to the budget through working together with the National Assembly.
I was the finance minister speaking there on the 2020 budget, the way forward. Well, we'll have more discussions on that later on the show. But for now, let's look at the commodities market space with one of the research analysts with Financial Derivatives Company, Bolanle Agbaje. Good morning, Bolanle.
Good morning.
Good to see you again. Well, you heard the finance minister.
Yes.
Well, talking about what next for the budget. Everybody seemed to be concerned. And,
yes.
of course, we have seen the oil market vulnerability
yes.
at this time because of COVID-19. Now, what is the outlook on this oil market, given the financial pledges? I mean, we've had the G7 make some pledges towards this COVID-19, and then saw the Fed also make its
well,
pledge
yes.
on this.
So we did expect that the government would come sooner than later to, kind of explain how they would cope with the coronavirus currently circulating. And as of today, we have heard that they've released or announced a supplementary budget. I mentioned before that, it's important for the fiscal and the monetary policy sides to work hand in hand, because the central bank can't do it alone. And it's obviously evident that revenues would be reduced significantly or affected significantly as a result of this from our oil prices and our external reserves as well. And I think they would definitely look into borrowing, look at the Eurobond market. But like you mentioned earlier, we had the downgrade from stable to negative by S&P, which would most likely increase the risk within, or the risk when it comes to investors looking at investing in Nigeria, and definitely increase, the demand for their yields when they decide to, lend money to the country. So it's good and it's bad in the sense that, with as much as we're looking for funds outside the economy, we're also, at risk of paying more for these funds. And it calls to question what the future holds for our revenues. Now,
considering the fact that the benchmark has actually gone rather, the oil price has gone below Nigeria's benchmark of $57. Now, what worries you the most about this development?
Well, it's not any cause for concern because it's happened before. It's happened several times. But like I mentioned, today, OPEC is meeting, OPEC Plus. They're meeting today to determine whether they would most likely cut output and supplies. Well, and I obviously expect that they would do so by about 600.
And if that happens, what would that mean for Nigeria?
Well, it's a tricky one because when you look at, we're moving close to the levels we had within the 2008 recession. And at that time, OPEC had cut output by about 4.2 million barrels per day. But as at now, we've only cut about 2.1. So it calls to question whether it's enough to drive the economy. Some analysts expect that OPEC should actually cut more to move into, or move very close to that pre-recession region. But it also calls to question what happens to the economies that are extremely dependent on oil. And also the market share of the output within the global sphere. If they do cut, more than expected, then the U.S. has an opportunity to gain more market share because they are not part of this cut, and I don't think they would be looking to cut output at the moment. Okay.
Now, looking back home, how would you assess the outlook for Nigeria's oil and gas sector, looking at this scenario?
Well, regarding our oil and gas sector, I mentioned on Tuesday that, we don't expect any changes to our pump price. That's one. And NNPC has maintained as the only or the sole importer of oil. We definitely would expect new oil marketers, to kind of import oil because it's very cheap for them at the moment. But it also calls question the price. How much are they actually making from the sale of this particular product? But like I said, when it comes to oil supply, there's a glut in the market. So it's something that we have to, tread carefully and tread lightly when it comes to, looking at that aspect of the oil prices.
Now, with Nigeria being an oil-dependent economy, we have seen our reserves continue to draw down, although we've seen the Naira, stabilize a bit, though in the parallel market. Yes. But at the INE window, we saw that depreciate as at yesterday.
Yes.
Now, do you see a possibility of Naira devaluation there?
It's too soon to tell. I don't think we've hit that, rock bottom yet. The CBN is still doing a very good job at maintaining our exchange rate.
But for how long?
So I think that's where the downgrade came from, because it calls question what you have when you sustain sustainability. How long will they sustain, or keep fighting this devaluation? But I don't think it's something we need to talk about at the moment. It's been maintained or handled carefully with the central bank on top of things.
Okay. Now let's look at domestic commodity price movement there. We saw mixed movement in elastic commodities prices,
yes,
while we saw the inelastic commodity prices being relatively flat. What are the driving factors? Can you take us
Well,
through
with
that?
the elastic, I think the only aspects that are driving the commodity prices at the moment, especially the elastic ones, would be, supply and demand. We haven't really seen any significant changes to some of these commodities. When you look at the elastic ones, you have the likes of semovita and sugar declining, and then you have the likes of the new yam, maintaining status quo. So it's just mixed movements within the elastic side. And then when you look at the inelastic commodities like rice, gari, beans, some of those, we have the fact that in Sokoto State, they're opening some rice mills. So we do expect that the price of rice would be affected positively, hopefully, when we see a boost in the supply of rice. The border closure still has kept, prices stable at the moment. But regarding the inelastic prices, commodity prices, thankfully, have maintained their status quo.
All right. Now, with the continued spread of this coronavirus,
Yes,
what is the outlook for the commodities market, particularly the commodities? Yeah.
Well, it definitely means that, we wouldn't be importing, some of these commodities like we used to. China was one of our trading partners when it comes to the import of like wheat, some of the commodities like wheat and others. But import of these commodities would definitely decline. But it also gives room for within the country to grow and increase our supply base within the country. So I think it might slightly be positive for us within the country when it comes to commodities.
Now, do you think this coronavirus spread might probably have some kind of implications for the AfCFTA?
Well, yes and no, because obviously we're still in a global economy. The AfCFTA, the main aim of it is to increase globalization, trade between countries. But at the moment, you have industries like the travel and tourism industry gravely affected by this. It's not easy to manage a health crisis because even if at some point you planned during the year to increase or boost output and, you know, more or less sell it to neighboring countries, then you're obviously thinking of the interaction. Like we've had new cases or the second case in Senegal. Yeah. And once you know, business officials hear that, they would probably cut, you know, interaction with those countries. And I think it might put a hold to it temporarily, but I don't expect that it would, you know, feed until the end of the year. All right. Thank you very much for your time, Bolanle Agbaje. Bolanle Agbaje is one of research analysts with Financial Derivatives.